Hello everybody, and welcome to an Accounting Grade 12 lesson on inventory valuation. What we're going to do today is we're going to go through one of the questions in the 2011 exam paper, and we're going to deal specifically with inventory valuation. Now, what you need to make sure that you're able to do is that you can perform various calculations and interpret financial documents that relate to two main aspects. Firstly, there's going to be stock valuation, and then there's going to be asset disposal. With stock valuation, you need to remember that there are two methods of stock valuation. The first one is called the FIFO method, and the second method is called the weighted average method. If you would like to prepare well for your final exam, you should make sure that you know both of these methods well and that you're able to perform the various calculations relating to them. In particular, with FIFO and weighted average, the questions usually ask you to calculate three main things. They usually ask you to calculate the closing stock. They secondly would ask you to calculate the value of your cost of sales. And thirdly, you could be asked to calculate the gross profit. Hand in hand with these calculations is your ability to evaluate them. So what that means is that you would have to give advice to any business or any company that is busy using a different valuation technique and be able to comment on it and give advice as to which method is the best. Then you should also make sure that you go over your asset disposal notes very well, and you should in particular make sure that you know how to calculate depreciation. And you'll remember there are two methods to calculate depreciation. And then, of course, you must make sure that you know how to do your asset disposal account, enabling you to calculate the profit or the loss on the sale of your asset. Because when we're dealing with asset disposal, remember, you are dealing with the sale of an asset. Okay, let's get started and look at the question that you are given. You'll see there, first of all, the very first question is just a question about theory. They're asking you to determine what do the letters FIFO stand for. And this is something you should just have studied, and I'm sure you all know the answer already. The answer is first in. I can already hear you saying it, first out. So remember, the reason we use FIFO is that the stock that comes in first is going to be the stock that is sold first. In other words, the stock that is first in is going to be your stock that is first out. You'll see that there are 2 marks allocated to this question, so that's 2 easy marks provided you know your theory. Do not forget this when you're preparing for your final exam. Learn your theory. Okay, let's look at the second question. The second question is relating to the value of a set of bicycles. So we'll have to go and check and see what the question's actually asking us. You'll see that we are given some information on Speedy Traders. And let's read through the paragraph together. It says there that Speedy Traders sells one type of bicycle to major retail stores around South Africa. They make use of the FIFO method for stock valuation, and they use the periodic inventory system. Those 2 aspects are important because you'll need to know that when you're valuing your stock, you are going to use the FIFO method, and when you are calculating important calculations such as cost of sales or gross profit, you are using the periodic inventory system. Please notice the periodic inventory system. It is not the perpetual system, which is the other method of stock valuation that we sometimes get. So be sure that when you're preparing for your finals that you know those 2 methods of stock valuation very, very well, periodic and perpetual. Now, let's have a look at the information that we've been given. The question says that the information below appeared in the records of Speedy Traders for the year ended 30th of June 2011. The business uses a fixed selling price of 6,750 per bicycle. Now, don't get confused. This 6,750 is the selling price of the bicycle. Make sure that you understand the difference between your cost price and your selling price. A quick recap is that the cost price is the price that you bought the stock for, and the selling price is the price that you are selling the stock for. We are going to use those 2 terms later on when we calculate the gross profit. Now, if you look at the table that the question has given you, you'll see there that we've got a whole lot of information on stock. And we've got here in the first column the number of bicycles. It tells us what our stock of bicycles on hand was on the 1st of July. It tells us what bicycles were bought during the year, and it gives us purchases for September, January, and May. In other words, this is your stock of bicycles that you've bought. And then it also tells us that we returned some bicycles, and those bicycles that we returned relate to the January purchases of bicycles. Then we're also given figures on the bicycles that were sold during the year, and finally, we are given the value of our bicycles on hand on the 30th of June. So if you look at this question, you should immediately be able to see that the bicycles on hand on the 1st of July 2010 are going to be your opening stock, because that is what you started the year with. Then we have bicycles on hand on the 30th of June 2011. That's 1 year later. I'm sure that you realize that that should be your closing stock. Okay, now that we have that information, let's have a look at what the question is asking us. The question is asking us to calculate the value per bicycle on hand on the 1st of July 2010. Make sure you look at the dates very, very carefully, because you don't want to make a mistake and calculate the value of the stock on hand on the 1st of July 2011 when the question is asking you to calculate the value of the stock on hand in 2010. So, if you will look back at our information, what they're actually after is this question mark that I'm underlining or circling here. They want to know what is the value per bicycle. If you can see the bicycles on hand on the 1st of July 2010, we have 60 bicycles, and we want to calculate the value per bicycle. In other words, how much is one bicycle worth? Well, that should be quite an easy calculation, because can you see that they have given us the total value in the third column here? They've told us that the total value of the bicycles is 240,000 Rand. So what we would do, if we know that 60 bicycles are worth 240,000 Rand, I'm sure you already see how to calculate the answer. We've got 60 bicycles worth 240,000 Rand, so what's one bicycle worth? Well, it's quite easy. All that we need to do is that we need to take the 240,000 Rand that we have, and we need to divide it by 60 bicycles. That will give us the cost price of one bicycle on hand. You can see that 60 bicycles are worth 240,000, so one bicycle is simply going to be 240,000 divided by 60. So you'll grab your calculator, you'll just do the calculation, 240,000, divide that answer by 60, that comes to 4,000 Rand. So for 2 marks, we've already done it. We've calculated the value of a bicycle on hand. It's 4,000 Rand. 2 marks, calculated and done. This is a question where you can pick up several marks quite easily, provided you know your theory very well. Right, let's look at the next question. The next question is 1.1.3, and what this question is asking us is to calculate now the value of the closing stock on the 30th of June 2011. So in our previous question, if you remember, we had to calculate on the 1st of July 2010. That question related to our opening stock. This next question, 1.1.3, is asking us to calculate the value of the closing stock. Let's look back at our information. You can see there that at the end of the year, on the 30th of June 2011, we now have, I'll use a different color here, 235 bicycles. But the trouble is that we don't know the total value of the bicycles we have. In fact, we have got a question mark over there. So what we need to do is we have to apply the knowledge that we have about the FIFO system. Remember that FIFO stands for first in, first out. So the first bicycles that are going to be sold are the first bicycles that came in. Can you see that in this question we have sold 450 bicycles? There's the number there. 450 bicycles were sold. But at the end of the year, we have 235 bicycles left. What that actually means is that those 235 bicycles that we have left at the end of the year are the last bicycles that we purchased. Because using the FIFO method, the first bicycles that came in would be the first bicycles that were sold. That is why it is FIFO, first in, first out. So We sold 450 bicycles, and we were left with 235 bicycles. My tip to you is to now work backwards to try and calculate what your closing stock is. So out of these 235 bicycles, can you see that we have all 180 of these bicycles left over? Because we would have sold the bicycles that we bought earlier first. That is the principle of FIFO. The bicycles that came in first are the bicycles that went out first. First in, first out. So we have all of those 180 bicycles left. We sold everything except 235 bicycles, and that means that we've got these 180 left. Now what you should do is you should take that 235 that we have left. We know that we have the bicycles in May left over. So we've got all of those 180 left over. That means that we sold another 55 bicycles out of the previous set of bicycles that we purchased. What I've done is I've taken the 235 that I've had left, and I've subtracted May's bicycles to be left with 55 bicycles. Those 55 bicycles were from January's bicycles, where we had 200. So if you want to calculate the value of the stock that's left over, what you need to do is you take the last bicycles first. We'll take these 180 bicycles, and their cost price was 4,200 Rand. So let me put that into my calculation so long. I'm going to start off by taking the 180 bicycles which we had left over from the purchases of May, and I'm going to multiply them by 4,200. But that's not all the bicycles we have left, because in fact we have 235 bicycles left overall. So once we've accounted for those 180 from May, we still have 55 of January's bicycles left, which you'll remember I did in this calculation over here. So we have 55 of these left, plus 180 of May's bicycles. That gives us our 235. So to do the final calculation, we also have to add to this May's bicycles the bicycles from January. There are 55 of those bicycles, and the cost price of those bicycles was 4,500 Rand, which you can see that I have over here. So to solve the question, I will need to put 4,500 Rand in here, and I'll need to do the sum and get our final answer. So let's bring the calculator up onto the screen. We'll start off with 180 bicycles at 4,200 Rand each. Those are the bicycles left over from May's purchases. So let's write that answer down. That's 756,000. I'll put that in the correct place here. 756,000. Then I have January's bicycles, which is 55 times 4,500. Let's do the calculation. 55 times 4,500. That answer comes to 247,500. So let me put that answer in there. 247,500. So that means that our total closing stock is simply going to be the sum of those two numbers, the 756,000 plus the 247,000. Let's do it on the calculator. I still have 247,500 there. Let me just add the 756,000, and the answer comes to 1,03,500. 100,3500. Let me write that answer in for you. 100,3500. And that is your 4 marks for calculating the value of a closing stock. Make sure you know how to do that. Make sure you're able to work backwards and look at the information that you've been given to determine which bicycles you have left over. Our next question is asking us to now calculate the gross profit on the 30th of June 2011. What's important to know is that when you're calculating gross profit, you need to know the formula for gross profit. This is a formula that's been around since grade 10, and you should know it pretty well. What we do is we take sales and we subtract cost of sales. We're quite lucky here in that the question has given us a nice answering grid for where we are going to include our information. And it's given us opening stock, purchases, closing stock, cost of sales, sales, and gross profit. Gross profit is the final answer that we want, and we need to see what information we've already been given. So let's look back at the information that we have. We have been told that the business used a fixed selling price of 6,750 per bicycle. That means every single bicycle that we have was sold for 6,750 Rand. It is fixed. In other words, the selling price does not change. Now, if we have a look, we will be able to see that the bicycles that we sold during the year were 450. We sold 450 bicycles at 6,750 each, which came to a total value of 3,037,500. What you should be able to see by now is that this answer is your sales. Remember, if you want to calculate your total sales, what you're going to do is take the selling price of one unit and multiply it by the number of units you sold. So in this case, we sold 450 bicycles at 6,750 Rand. You could check it on your calculator if you like. If you take these two numbers and multiply them, the one by the other, you're going to get that answer of 3,037,500. So we already have one number that we can put in our grid. Let's look back at the answer sheet. You'll see there that we have sales. The sales figure is given to us. All we need to do there is write that 3,037,500. You'd get 1 mark just for copying the number over correctly. You can see there it is. What I've done is I've simply taken our sales for the month and I've transferred them into my statement. So far, we already have one number out of the 6 numbers we need. Okay, let's have a look at the other information that we've been given. We're going to need opening stock, purchases, closing stock, and we're going to use those to calculate cost of sales. Here is where it's important to look at the information and see what you've been given. Can you see that we've been given bicycles on hand on the 1st of July 2010? You remember I said to you originally that that was my opening stock. That is what I started with. If ever you need to calculate what your opening stock is, remember that that is the value of the stock that you started with. They've actually been quite nice to us in this question in that they've given us the total value here at the end. So what you should be able to see is that our opening stock is 240,000 Rand. So what I'm going to do is I'm just going to fill it here in on the sheet, 240,000 Rand. That is my opening stock. In other words, that is the number of bicycles that I began the year with. Okay, so we have now calculated 2 out of the 6 numbers that we need. There's quite a bit of work still left to do. Let's take a break, and when we come back, we'll carry on. Welcome back, everyone. Before the break, we calculated 2 of the 6 numbers that we need in order to calculate the gross profit. We've already calculated our sales and we've calculated our opening stock. 3 more numbers needed, and we're going to use those to calculate the gross profit at the end of the activity. You'll see there that the next number that we require is purchases. When we're looking at purchases, we're interested in what the business purchased during the calendar year. So let's have a look back at what we've been given. You'll see there that our purchases are obviously going to relate to the bicycles that we bought during the year. And we've been given a whole lot of information. We've got September's bicycles purchased, January's bicycles purchased, and May's bicycles purchased. You can see that we've bought 630 bicycles at a total value of 2,606,000 Rand. So those are our total purchases. So let us put that in brackets here next to the total purchases. 2,606,000 Rand. Now, the next important thing that you must not forget, when you are looking at a table like this, be sure that you consider if there have been any returns. You will see there that there's been some information given to you regarding bicycles that have been returned from January purchases. So, out of the 200 bicycles we purchased in January, you'll see that we've actually returned 5 bicycles at a value of 4,500 Rand each, which comes to a total here of 22,500 Rand. Just needed to erase the unnecessary marks. this 22,500 Rand represents the bicycles that we have returned from January's sales. We don't know why we returned them. Perhaps it could have been that the bicycles were not according to our specifications. Perhaps they got damaged or broken during transport. But the point is that we've returned these bicycles. In other words, we did not purchase the full amount of 2606,000 because we returned this amount of bicycles, 22,500 Rand. So what we're going to need to do is we're going to have to subtract that 22,500 from our purchases, because we did not purchase those at all. We returned them. So the correct calculation here is going to be that we take 2,606,000. You saw where I got that number from? It's the total at the top of the bicycles bought during the year. And from that we're going to subtract the bicycles returned during the year, which is that 22,500 over there. So let us do it on the calculator. We're going to say 2,606,000. From that we're going to subtract 22,500. That means that we actually purchased this answer here, 258,3500. Let me put that answer in the money column, 258,3500. That represents the total number of bicycles that we purchased during the month. Okay, we have also now got another important item. We need to calculate our closing stock. Remember, opening stock is the stock that you started the month with. Closing stock is the stock that you ended the month with. Or it could be a year or a week, depending on how long your period is. In this case, we're actually doing it for a year. So we need to see what our closing stock is. Nowhere in the question does it give us our closing stock, because there are question marks over here and over there. The good news, though, is that we've actually calculated our closing stock. Remember, before we took the break, the question asked us to calculate the value of the closing stock on the 30th of June. We actually have that answer. We've done it in the previous question. There it is, 1003500. So all we need to do actually is just transfer that number, 1003500, into the correct place on our financial statements, which is in calculating the gross profit, we'll need to put that same number there, 1003500. That's the same answer as we calculated in the previous question. There we are. Let's just check it, 1003500. Now, my learners often ask me, let's say that you've made a mistake in the previous question. You've made a mistake and you've calculated your closing stock incorrectly. Are you going to lose the marks in this question where it comes to calculating the gross profit? The good news is that if you've made a mistake in a previous question, the examiner is probably still going to give you the mark for just transferring the incorrect answer into the next calculation, because you should not be penalized for something that you got wrong in the previous question where the figure is used for the next question. So rest assured, you're most likely to get a method mark for just copying the number over from question 1.1.3 into question 1.1.4. Now, the next important thing that you need to know is how to calculate cost of sales. There are usually two methods of calculating cost of sales, and what method you use is going to depend on whether you're using one of the two inventory systems. Remember, you have the periodic system and you have the perpetual system. If you are dealing with the perpetual system, you will use that formula that we've had since grade 10, where you calculate it using the markup. However, if you are dealing with a periodic system, you need to know a very important formula. That formula I'm just going to write here to refresh your memory. The cost of sales under the periodic system is as follows. Opening stock plus purchases plus other purchasing expenses and then from that we're going to subtract our closing stock. Now perhaps in your textbook you've been taught it slightly differently, because many textbooks will mention opening stock plus purchases plus carried on purchases plus other purchasing expenses, plus import duties. Just go over that formula. I've just included all of those other expenses, such as carriage on purchases and import duties and customs duties. I've just included that as other purchasing expenses. But just make sure that you know the formula to be able to calculate your cost of sales using that method. Now, you'll remember when I first started showing you this question, I said that there are some things in the question that we need to be very aware of. The question uses the periodic inventory system. There we have it. I'll circle it in yellow. The periodic inventory system is being used in this question. What that means is that we have to use the formula that I have just shown you on the answer sheet. Opening stock plus purchases plus other purchasing expenses minus closing stock. Now, if we look back at the information that we've been given, we will see that all we are given is our purchases. We, in fact, are not given any other purchasing expenses in this particular example. So it's actually a little bit easier than using the whole full formula because we actually only need opening stock plus purchases minus closing stock, since we do not have any other purchasing expenses. This item does not apply to this particular question. But just remember, if you get a question that has carried on purchases or any other purchasing expenses, you must make sure that you know to use that full formula. The good news now is that we actually have everything in place to calculate cost of sales. Have a look. We have opening stock, there it is. We have purchases, there they are. And we have closing stock, there it is. So all we need to do is stick in the correct signs. We're going to take opening stock, add our purchases, and then we're going to subtract our closing stock. Remember, when you're doing accounting, a negative number is placed in brackets like that. So we will calculate the cost of sales using the formula, and let's pull up the calculator. What we're going to do is we're going to start with the 240,000. Just move the calculator here so that you can see that is our opening stock is 240,000. To that we are going to add our purchases. That is 2583500, and from that we are going to subtract the closing stock, which is 1003500. That gives us our answer of 1.82 million. 182 and 4 zeros behind it. That is going to be the answer to our cost of sales. So let's write it in the box. 1820000. Please, 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 when you're doing your final exam, don't make the silly, careless mistake that so many learners make by not counting the correct number of zeros. So many times when I'm marking papers, I see that people have put 3 zeros instead of 4 zeros. Count your zeros correctly so that you do not lose unnecessary marks. Okay, now the good news is that we have all the information that we need to calculate our gross profit. Let's go back to our formula for gross profit. There it is. We're going to take sales and we're going to subtract cost of sales. Here is sales, here is cost of sales, so all we're going to do is subtract the top number here from the bottom number, so I should put the top number in brackets in order to get the final answer. Let's bring the calculator onto the screen. What we're going to do is we're going to take our sales price, which is 3037500. From that we're going to subtract our cost of sales price, which we've just worked out, 1820000, and that gives us our final gross profit of 1217500. All that's left for us to do is just to write it in the special answer sheet. 1217500. And there we have it, 6 marks collected. Make sure that you know how to calculate this gross profit, because there are some easy marks if you know your theory very well. The next question is a more detailed question relating to auditing. So you'll see there that in 1.1.5, it says that the owner and the accountant disagree on the method of stock valuation. Steve is the owner, and what he wants to do is continue using the FIFO method, because he says it is easier to calculate. Bongi, on the other hand, he's the accountant, and what he wants to do is he wants to change to the weighted average method, because he says that the profit will be lower, and therefore the income tax is going to be lower. Now, the question is asking you, as the internal auditor, you have to say what you would say to Steve and Bongi. In other words, who is right? Is Steve right? Is Bongi right? Which of the two methods should be used? You have to read the question carefully, and you'll see that we have to state 2 points. Okay, let's have a look at the reasons that these two people are giving for their arguments. Steve is saying we must just use FIFO because it's easier to calculate. I don't know about you, but I don't think that that's the right reason that you can use. Just because something is easier to calculate doesn't necessarily mean that it's the right system. Okay? Bongi, on the other hand, what she says is that she wants to use the weighted average method because she says that if you use the weighted average method, the profit is going to be lower and therefore the income tax is going to be lower. So she says that the business is going to be able to save on tax by having a different method. Using weighted average, you're going to be able to manipulate the profits and make them lower, which means that you're going to be able to pay less income tax. Think a little bit about it and see if you can come up with a good suggestion as to what should be done. Okay, one of the main things is that when you are changing a stock valuation system, you're going to encounter some challenges. One of the main problems that you're going to encounter is that you are going to have two different years that have got two different sets of numbers that have been calculated in two different ways. So let's say, for example, that we calculate this year's valuation method by the weighted average method. And then next year we calculate the FIFO method. What's going to happen? It's going to be very, very difficult for you to compare the two stock valuation methods because next year is going to be very different to this year. You remember that we use trading stock in many ratio calculations. For example, we use trading stock when we're calculating the period of stock on hand, and we use it when we are calculating the rate of stock turnover. Those numbers are going to be inaccurate if you have suddenly changed your weighted average method. So that's the first point that we could say. What we could say is that it will be difficult to compare figures from one year to the next. So as a result, we should maybe not change the stock valuation method. A second reason is that before you can just change your stock valuation method, what you actually have to do is you have to get permission or you have to get clearance from SARS to actually make the change. Because we know that our stock valuation method is going to affect our gross profit. If you use the weighted average system instead of the FIFO system, depending on what's happened during the year, you could get a different gross profit. That different gross profit is going to mean that you're going to pay a very different amount of tax. So SARS, the South African Revenue Services, is going to want to know that you are doing ethical business. And as a result, they would want to have permission, or you'd have to get permission from them before you can make such a change. Okay, another reason might just be that decisions should not just be made on what is easier. That I've said before, but we can just write it down as a point. Decisions should not be made on what is easier. We're not interested in what's the easiest calculation. We are actually interested in what gives the true and the fair reflection of the value of our stock. So you could write that down as a point. Decisions should not be made on what is easier, but instead on what gives the most accurate value. So we're interested in accuracy here. We want to know which of the two systems will give the most accurate value of our stock. One other possible thing, or one other possible reason, is that when we're looking at the stock that we have got bicycles. And the bicycles, we only have one type of bicycle. So we only actually have one item of stock. We're not like a big shop like Checkers that has a whole lot of different values of stock. We're only selling one item. So what that actually means is that perhaps FIFO is the more accurate system because can you see, if you look back at this information, that the value of the stock is constantly changing. So the bicycles that we started with, you remember we calculated that number as 4,000 Rand. Suddenly, in September, bicycles became cheaper. They were now only costing 3,800 Rand. Then they went up to 4,500, and then they went to 4,200. What that actually means is that the FIFO system will probably be a little bit more accurate if you have only one item of stock whose value is changing all the time, because the stock that you have left will be valued at their most recent prices. They will not be valued at the price that you could have bought them for on the 1st of July 2010. So what we could perhaps write here, we could write a sentence explaining this, such as bicycles change in value, which makes FIFO more appropriate. Please note, though, that the question only asked us to name 2 points. Because it's out of 4, you can really expect that each of those questions is going to be worth 2 marks. So each point is going to bring you 2 marks. Please just make sure that you think about the question carefully. These are definitely not the only possible answers. I'm sure that you are able to come up with some more reasons as to which system is better and why we can't just change from one system to the other during the year. So if you've got some other answers, the examiner will look at it, but these are some model answers that you could use. So we've now answered that question, and we've got one more question to do. Let's answer that after the break. Welcome back. We've only got one more question to do, so let's have a look at this question carefully. You'll see that this question relates to problem solving. You're likely to get a problem solving question in your final exam. So let's read the information and see what we have to do. It says here that Quick Bikes sells one brand of scooters. The owner, Dr. Zulu, has 3 branches operating in Riverside, Valley View, and Mountain Rise. So those are 3 different areas. The 3 branches are managed by Robbie, Vusi, and Melanie, respectively. Now, the boss of this business, Dr. Zulu, or the owner of this business, has obtained the annual figures from the 3 branches for the financial period ending 28th of February 2011. What we're required to do, if you look at the question, it says that we need to identify one problem in relation to each branch. And what we have to do is we must quote figures to support the problem. It's very important in a problem-solving question like this to read the question carefully so that you know what exactly is required. We have to identify one problem in relation to each branch, and we have to quote some figures to support the problem. If you don't do both of those things, you're unlikely to get full marks for the question. What we need to do is we also have to offer Dr. Zulu advice on how to solve the problem. Okay, so let's have a look at the information we've been given. We're told here there's Riverside, there's Valley View, and there's Mountain Rise. And here's the information on the number of scooters available for sale, the number of scooters that were sold during the year, the physical count on the 28th of February, the cost price per scooter, the selling price per scooter, the amounts that were spent on advertising, as well as the salary of the manager. Okay, so let's have a look first at a few things. You'll see that the selling prices are the same, and you'll also see that the salaries of the managers are the same in all 3 cases. But there are some significant differences in advertising per year. Robbie is spending only $15,000, Vusi is spending $40,000, and Melanie is spending $60,000. What you need to do when preparing for your exams is read through many questions like this and see if you can identify what problems have arisen, because you're going to need to interpret them, and you're going to have to need to give the owner some advice on what he or she should do. Okay, so the question has said that they want us to identify one problem in relation to each branch, quoting figures. Please read the question carefully. Do not now go and quote 3 problems for the Riverside branch or 3 problems for the Valley View branch. The question is asking you for one problem in relation to each branch. So let's see how the question is set out. First thing that we should do is we should look at the 3 branches. So let me write Riverside down here, because Riverside is the first branch. What problems can you identify in Riverside just by looking at these numbers? Can you see, first of all, that there were 470 scooters available for sale? There we have the figure, 470 scooters. We also know that there were 380 scooters sold during the year. So what that means is that we could work out how many scooters should be left over after selling the scooters that we did. Let's check that. If we have a look at the information, we started with 470 scooters, and we sold 380 scooters. So we should have 90 scooters left over. But there's a problem. Can you see that our physical count on the 28th of February only shows us 72 scooters? Guess what? Some scooters have gone missing. That means that there is perhaps some theft, that there is perhaps some loss of stock, and that is something that we should be concerned about. So let's try and write that as a comment. We could say, remember we have to quote some figures and identify a problem. We could say there should be how many scooters left over? You remember we did the calculation previously, 470 minus 380. There was the answer, 90 scooters left over. There should be 90 scooters left. So we're quoting a figure if we write this answer here. There should be 470 minus 380 scooters left. And so that answer is 90. There should be 90 scooters left. There you are. You've already answered part of the question because you've quoted that figure of 90. The examiner will look to see that you've calculated a figure. So there should be 90 scooters left over, but there are only 72. What does that mean? It means that there are 18 scooters missing. Those scooters could have been lost, they could have been stolen, they could have been damaged, and there is a serious problem here because there are 18 scooters that are missing. You could see there, if you wanted to do some further calculations, every scooter sells for 11,500 Rand. Okay? But the cost price of the scooter was only 7,500 Rand. So what we could do if we wanted to is we could work out how much profit was lost. Every scooter is sold for 11,500, but it only cost 7,500. So the profit that we'd make on each scooter is 11,500 Rand minus 7,500 Rand. You can see that the answer comes to 4,000 Rand. For every scooter that's gone missing, we've lost 4,000 Rand in profit. What we could do is work out what the total profit is that we've lost by multiplying it by the 18 scooters that have gone missing. Can you see that that is a significant number? 72,000 Rands worth of profit has been lost because these scooters have gone missing. So let me write that down just on the page. If you want to quote another figure, we could say that 72,000 Rand of profit was lost. So if you want to quote another figure, by all means do that. You've already answered it correctly if you've quoted a figure to say how many scooters are missing. Now, some of the advice that we could give Vusi, Dr. Zulu. How could we advise Dr. Zulu in solving this problem? Often, stock goes missing in businesses, so some of the things that we could do is we could improve the internal controls of the business. So perhaps he could do something like installing cameras in the business to check to see whether the stock is being missing. If that's not possible, he should do maybe something like regular stock takes. Because if you do a regular stock take, you will be able to determine very quickly whether any stock is missing. And then what you could do is you could make sure that your employee is held responsible if some stock goes missing, because this is a lot of profit that's gone lost. Okay, that was the Riverside aspect of the question. Let's look at the Valley View aspect of the question. What is the problem here? Well, there were 300 scooters available for sale, but the business was only able to sell 75 of them. There are actually 225 scooters left over. Can you see that this business, or this branch of the business, is not selling enough scooters? They only sold 75. Compare that to Riverside, there they sold 380. Compare that to Mountain Rise, there they sold 190. And there are actually 225 scooters left over. This stock is not selling well. So what we could do here is we could write in our next answer, if we're looking at Valley View, we could say not enough scooters are being sold. And of course, we have to quote a figure, and to quote the figure, all that we could do, if we want to quote a figure, we could say that there were only 75 out of the 300 scooters that were sold. So let's have a look. We could say 75, only 75 out of 300. If you want to be a little bit more fancy, what you could even do is you could calculate a percentage if you wanted to. So what we could do is we could say 75 divide by 300, and the answer we could multiply by 100. That gives us 25. Can you see that only 25% of the scooters are being sold? So if you want to add that to the question, you could say 25%. So 75%, almost, well, actually 3/4 of all the scooters that we have in stock are not being sold. Also, another problem here is, can you see what Vusi is spending on advertising? Vusi is spending 40,000 Rand on advertising, whereas Robbie is only spending 15,000 Rand on advertising. And yet, that 40,000 Rand that Vusi is spending is not helping him to sell the scooters that he wants to sell. So, what should we do? We should perhaps give some advice. One type of advice would be to advertise more effectively. Perhaps this advertising is not working well, and perhaps this business could adopt a different advertising strategy. That could be a possible thing. Or another problem is that they could restrict, another solution is that they could restrict the amount of stock they have on hand. Let me explain what I mean by that. If you look at this question, you'll see that there are 225 scooters in the stock of Vusi's shop. Those scooters could get stolen, they could get lost. So what we should make sure we do is that we don't buy so many scooters. Rather buy them when we're all sold out so that we're able to sell them in the future. Because really there are not enough scooters being sold in this particular branch. Right, let's look at the very last one. The last one is the Mountain Rise item. And what we can say here is that Melanie has spent the most on advertising. There's the answer. She spent 60,000 Rand on advertising. But she has not even sold half the scooters, well, she's just sold half the scooters that Robbie is selling. So one of the challenges facing Melanie is that she needs to have better advertising techniques as well. So what we should do here is we could write something along the lines of the advertising strategy. Let me just write this here. Mountain Rise. We could say lots of money is spent on advertising, but only 190 scooters were sold. But there's actually an even bigger problem. Can you see that she only had 190 scooters in stock to begin with? So in fact, Melanie has sold out all the scooters that she had. Her advertising is actually working quite well because everybody is coming to buy the scooters. She had 190, she sold 190, and she has absolutely none left over. So what we could say is that she sold out all her stock. Every single scooter that she had in her stock was sold. So she's wasted some of that extra advertising expenditure because probably what has happened is that some people have come to her shop to buy scooters and there haven't been any more in stock. I'm sure it's happened to you that you see a big special on something that you want to buy, and when you go there, there's none left over. If you were a customer, you'd be quite upset about it. So what we could give advice to Melanie is what we should do in her business is that she should buy more scooters in order to satisfy the demand for the scooters. If she had more scooters, she'd be able to sell more scooters, and her advertising strategy is working very well. Finally, what we could even suggest, if we're combining the two, we should actually have less scooters available to Valley View, to Vusi's business, and move them over to Melanie's business, to Mountain Rise. One branch is buying too few scooters to sell, and the other branch is buying too many scooters to sell. So that's the end of our question for today. Good luck with your final exams. Study hard and work hard.